Hello everyone, welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano. It is the 20th of February, 2023. Alright everyone, let's get into it. So apologies for missing Friday's episode, everyone. I know I missed 2 episodes last week, so hopefully this week I won't miss any, and obviously there's a lot to catch up on from the weekend, but just wanted to give a heads up. Most of you are probably aware of this, but I'm heading to ETH Denver on Monday next week, which means all of next week there will unfortunately be no refuels. It is just too difficult for me to find the time and energy to do them when I am traveling. You'd probably hear my croaky voice if I was to do one. So I will be hopefully back the following Monday. So not next Monday, the Monday after, or Monday or Tuesday. It just depends on the time zone differences of when I kind of get back there. But as soon as I'm back in Melbourne, I will definitely be doing a refuel. But yeah, definitely no refuels next week. And obviously when I get back, I'll be doing a longer one to recap all of the events that happen next week anyway. So you won't be missing anything. You'll just have to wait a little bit longer for me to report on it. But anyway, let's get into the news from the last few days. So first up, we had a all-core devs call that happened, and Tim Biko has his usual thread on this call here for all of you to see. Of course, it'll be linked in the YouTube description below. But on this call, they of course discussed Shapella, which is upcoming very, very soon. Some 4844 transaction changes, SSC, RPC, and self-destruct. So, as I said, it's all in this thread, everything you need to know. It's funny, I think that the core dev calls, I mean, they haven't moved on from Shapella yet or Shanghai. Obviously, they still need to finalize that and schedule that and everything. But definitely, we're getting to pretty close to the end game there. As I mentioned before, or I think this was last week, on the 28th, Sepolia will be forked to Shapella, which is Shanghai/Capella, which is the withdrawals upgrade. And then 1 to 2 weeks after that will be Girly, and then I guess like 2 weeks after that will be mainnet. So late March, early April, we can expect mainnet withdrawals to go forward. And anyone who's been listening to my show for months now would have known that already. So there's no use me harping on about that. And then obviously all the stuff around all core devs will shift to 4844 and a bunch of other things that have been discussed for quite a while, and that didn't make it into Shanghai. EOF, SSC, this self-destruct thing as well, which has been the debate around that is reignited recently too. So yeah, as usual, keeping up with all this stuff can be a little bit difficult, but it's great that Tim has put out this thread. All the links are in the thread, and you can go to the GitHub repo to check out some more information there. All right, so Superfizz shared this really cool little staking dashboard that was built by MetaNull here. As you can see, this staking dashboard shows you a bunch of different metrics around your validators. So you can see from the top, you can get information on peer count, on CPU usage, on CPU temperature, gas used, the current ETH price, number of validators that you're running, all that good stuff there, rewards, all the stuff there. This is actually really cool because there are dashboards like this already. There's one that comes built when you spin up a Rocket Pool smart node stack. It's all there for you. It's really, really great, and it's great for monitoring things. But for solo stakers, there aren't that many options. There are some here and there, but a lot of them leave a lot to be desired. I've played around with a bunch of them, and I've never really been too happy with them. You can, of course, build your own, but it does involve getting into the weeds of these things and editing things and actually learning how Grafana works, which is the software powering this dashboard. But this one was pre-built by MetaNull and seems to have all the information you would want to have here. I mean, a lot of dashboards I've seen omit, a lot of the time they omit the balance that you have in your validators and your rewards, which is, I think, one of the main things people care about, right? Obviously, we care about our uptime and what the CPU usage looks like, if there's anything funky going on there, what the CPU temperature is and memory usage is, just in case we need to change our hardware or upgrade our hardware or anything like that. But we also care about the rewards that we're earning for staking, obviously. So that is definitely a big thing that I like this dashboard for. As you can see down the bottom, it kind of shows that there. But I just wanted to highlight this for you solo stakers out there that are like tinkering around with Grafana dashboards. This is another one that you can check out for yourself. So this is available at docs.stakelocal.io. That website will, of course, be linked in the YouTube description below, but you can go check that out there. But yeah, just really cool to see this, and thanks to Superfizz for sharing it. All right, so Nethermind had a major release over the weekend. So this is Nethermind client version 1.17.0. So If you're running a Shapella node, you can update before the Shapella upgrade on the 20th of Feb, and this will support that, as well as the Jajang testnet configs are included, proto-dank sharding progress, and performance improvements, and of course much more. Now, obviously, you can see all the information about this here. There's a bunch of information on the GitHub repo for you to check out. This is really cool. In terms of execution layer clients, I remember mentioning that I guess like before the merge happened and a couple of months after the merge happened, that the execution layer clients except Geth weren't up to kind of scratch yet in terms of being able to rely on them like you could with Geth, being able to for them to be performant, being able to run them on kind of like lower spec hardware. Well, it seems that Nethermind has made massive strides lately. It's they've cut a lot of their memory usage requirements down a lot, and people are having great success running them. I haven't spun up a new Nethermind node yet. I'm meaning to, because I want to try out the experience syncing from scratch again and see how that goes there. But it's not just them, it's the other clients as well, such as Besu, which is available and has been getting a lot better, I've heard from a lot of people. There's also Reth, which is a newer client from Paradigm folks too there. And I'm forgetting another client, Aragon has been making strides as well, but obviously they're probably a lot more focused on the archive node side of things. But yeah, you can try running Aragon, of course. But in terms of client diversity, any of those will work except Geth, because Geth is still quite dominant. Not that dominant. I mean, it went to about 60%. Now it's back up to 63%. But as long as it's below 66%, that is the critical threshold. It's okay, right? Obviously, ideally, we want it below 50%. So if you are running Geth, consider running Nethermind. Now, maybe you've had some, I guess, bad luck with Nethermind in the past. Maybe it was too resource intensive for what you were running. Well, if you haven't tried it lately, I suggest doing so. But also, if you want to try something else, such as Besu and Aragon, you can do that as well. Now, from my experience, the best way to do this is not to just kind of replace your existing execution layer node if you're a solo staker, because obviously that will mean that while this is kind of syncing, you can keep the other one online and then obviously take that offline and put this and use the new one that you've synced. But then if something goes wrong, it'll send your validators offline, and you will lose. Well, not you won't get rewards. Right? You'll be penalized for being offline. So from that point of view, what I like to do is, if you have the ability to do this, I basically sync the node on a separate piece of hardware and then just run it and see how it goes for a few days. And if all is well and good, then I kind of change over then. But obviously, a few days is, it could be a few weeks, could be a few days, whatever you want to do here. But yeah, consider changing if you're running Geth. Just for client diversity purposes, of course, but also, it's good to support these other teams building these clients because they've been working really hard on this for a really long time, and we want to encourage their work. We want to support their work as best we can. All right, so Lao Zhu here from the Scroll R&D team put together a really great resource over the weekend called Ethereum Protocol Updates. Now, this is basically a, I guess, running resource that they're going to be doing, covering all the protocol updates over the week. So you can see here, this is a live document. So he's got week 1 here, and then week 2 here, which, and the dates covered are the 29th of the 1st to the 11th of the 2nd. And this goes through a lot of the things happening at both the execution layer and the consensus layer. And this is really, really good. I mean, honestly, the amount of information that he's been able to pack into this is crazy. And this is being done bi-weekly. And it's an open source project for the community to understand the latest progress of Ethereum protocol research and development, and for you to just stay on top of things on the protocol side. Now, I've been using this since I discovered it, to go through and click through on all the links to learn more about the Ethereum core protocol. And as I said, it's an amazing resource. It really has become a Bible of sorts for me for Ethereum protocol development. And it's only been kind of 2 updates so far, but they're so jam-packed that I haven't even been able to get through it all yet. So yeah, you can go check this out for yourself. It'll be linked in the YouTube description below. But this is great. I mean, as I said before, talking about Tim Byko's thread, he does those threads. Other people do threads and blog posts on things, but they never go into this much detail, right? Which is fine. I mean, the threads are really for the kind of more high level stuff, and if you want to dive in deeper, you can go to the GitHub and go into the Discord channels and the ETH research forum and things like that. But this is what Lao Zhu is doing here, is they're basically curating all this for you so that you don't have to go search for it yourself. So I hope that they keep this effort up, because it's a very valuable effort, I believe, and just wanted to highlight it for you guys. So I'll link this in the YouTube description below. You can go check it out. All right, Domothy has another tweet, another banger tweet that I wanted to talk about. So he started off this thread by saying, Blockspace is the thing that's being used for innovation and growth, and it's inflationary. 15 million new units issued every 12 seconds. Now, the units here are being referenced are gas on the Ethereum network. And the only way you can buy it is by acquiring and burning ETH, and it's in high enough demand that it's being sold at a profit. Now, this was Domothy quote tweeting someone who was confused about how deflation helps potential growth of the Ethereum network. Now, there's two things I wanted to focus on here. First thing was this framing of that Ethereum block space is inflationary is actually really cool, and I've never kind of like heard someone articulate it this way, because yes, Ethereum Blockspace is inflationary. Every 12 seconds, we issue a new block that contains 15 million new units of gas, and anything can be, can obviously use that gas as long as it's following the protocol rules. And in order to use that gas, you need to pay ETH, and obviously most of that ETH is burned as part of the EIP 1559 mechanism. Now, the 15 million unit is not set in stone. That is variable. That's the gas limit. That can vary from 15 million. It can go down to 10 million. It can go up to 20 million. The number's really arbitrary. Honestly, it can be any number you want it to be. And the way it's changed, I'm not going to go into that now, but the way it's changed is basically before it was the miners voting on it. Now it could be the validators voting on what to change it to in order to effectively change Ethereum's block size here. Now, but the every 12 seconds, well, that for now at least is set in stone. That can't be changed unless there's a protocol level change put in place, such as a hard fork that changes Ethereum's block times, or slot times, I should say, from 12 seconds to some other number there. So that 12 seconds is set in stone. 15 million is set in stone most of the time until it's kind of changed. It doesn't require a hard fork to change it. That's why I'm trying to make the delineation here. So we can safely say for the foreseeable future, there's 15 million new units issued every 12 seconds, and to access those new units, you need to buy ETH or acquire ETH, and you need to use that ETH, which in turn burns most of it. And then Domothy continues by saying, that a block space is in high enough demand that it's being sold at a profit, which means that the block space is making up for the issuance. So I've described this before, and this is all about obviously ultrasound money and ETH being deflationary, how the protocol issues new ETH to validators. Now, to offset that new issuance, we need to be above what's called the ultrasound barrier in terms of gas fees. The ultrasound barrier is currently at around 16 Gwei, so as long as the network is above 16 Gwei, the more ETH is being burned than is being issued. And you could say that it's not an exact science here, but you can say in so many words that the Ethereum protocol is in profit. It is selling its block space at a profit because it is not running at it's above the ultrasound barrier. So if it was below, obviously that'd be a different kind of terminology there, but it is above there. And this is one thing I think a lot of people misunderstand about Ethereum's deflationary properties. It doesn't just happen. It has to be earned. The Ethereum or ETH can't be deflationary unless we're above that ultrasound barrier. That's not how it works at all. To be fair, the only way it would work is if people were burning ETH on their own, not using it as fees, literally throwing ETH into the burn address on their own to offset the new issuance, which is obviously not going to happen because that's a lot of ETH, and no one's going to voluntarily, or at least most people aren't going to voluntarily burn their ETH like that. So the only way it really happens in reality is via this burn. And the only way that ETH is burned is if it's actually used on the network. Because people say, won't deflationary ETH or a deflationary currency generally, won't that lead to people hoarding it and not wanting to spend it? It's like, yes, okay, in a normal system. But Ethereum is not a normal system. It's been engineered in order to have the best of all worlds. And this is what I've talked about a lot in the past, but the best of all worlds here is the fact that ETH can be deflationary while still needing utility to make it deflationary. It's not just deflationary for the sake of it. You have to use ETH. Now, if people aren't using ETH because they're hoarding it, then ETH is not going to be deflationary because the ultrasound barrier, the gas fees on the network will be below that ultrasound barrier, so ETH will be inflationary again. But overall, inflationary, deflationary, I don't actually think it matters that much. I think people put too much emphasis on this. I know I've talked about it a lot in the past. I know I get excited whenever we see ETH go deflationary, but for me, it's become more of a marketing thing. The ultrasound money terminology is a meme. People take it too seriously. It really is a meme. And the best memes actually are the ones that people take too seriously and get upset about because it gives them a lot of reach. It gives them a lot of free marketing. And that's what it is to me. So ETH being deflationary has to be earned. Ultrasound money to me is more of a meme than anything else. It's not meant to be that descriptive. It's actually meant to be making fun of Bitcoiners calling BTC sound money. That's pretty obvious. And it was actually started like that. Justin Drake came up with that idea. That's a known fact that's how he came to that. And then other people kind of caught onto it. And it's like, yeah, this is a fun thing to I guess like poke fun at Bitcoiners about, because they were obviously always poking fun at Ethereum generally, and it really annoys them. And that's good because it's free marketing for Ethereum, right? So when taking all that into account, ETH there's saying that people aren't going to spend ETH because they're just going to hoard it because ETH's deflationary is wrong. Now, obviously, ETH has other properties that people think will make it go up in price, but that does not stop ETH from being used. I mean, ETH is being used so much. Like, we're still in a bear market and we're above the ultrasound barrier. We are negative like 30,000 ETH in issuance right now because people are using ETH so much because they want to access that block space. Even though the block space is inflationary, it is limited per block, right? And there are more valuable blocks than other blocks. Not all of these units are created equal, and that's where MEV enters. But when you're taking it as a whole, the Ethereum network is just such a beautiful machine that has such a symbiotic relationship with all its parts, and that doesn't happen on its own. It's been engineered specifically to be like that. And I personally have been a part of those conversations for a very long time, being a part of making people aware of these things and being a part of actually pushing these things forward, that I get a little upset when I see people say things that don't really make sense and need to be corrected. Now, I understand that not everyone's at the same level of knowledge that I am, and there's a lot of newer people in the ecosystem, but I guess like my pet peeve is when people talk with authority on a subject when they don't actually know what they're talking about. And I know I've probably done it in the past where I made a mistake and I'm like, oh, I shouldn't have said that because it wasn't actually accurate, but I call them reply guys, right? We've all seen them on Twitter. They just reply and they don't know what they're talking about, and then you'll just I can't be bothered replying to them anymore. But there are plenty of them out there. So maybe I don't think any of you are any of that. But I figured it was worth bringing up. I figured it was worth framing the discussion again, just so you can potentially educate people as well as time goes on. Anyway, I'm going to leave that for now. Moving on to a tweet from Jesse Polak here, who's quoting David Hoffman, who was sharing an announcement from the Rocket Pool Discord channel that said that Coinbase Ventures has made a direct investment into the RPL token. Now, I mentioned a couple of weeks ago, that Coinbase was looking to become an ODAO member, and that I don't believe has happened yet. They'll be joining soon, hopefully. Obviously, if they're kind of through the voting process and things like that, they'll be onboarded into the ODAO. But yeah, the fact that they've gone a step further and acquired RPL, which has been done, way after the fact. Coinbase Ventures is normally an arm of Coinbase that makes seed or Series A or private investments. Well, the fact that they've bought this RPL, I don't know if they bought it directly off the market or if they've kind of had a deal with the Rocket Pool team, but the fact that they've bought it so late after the fact of RPL coming out is a huge vote of confidence, I think, for Rocket Pool here. And as you guys know, I'm a huge fan of Coinbase lately. They've been doing a ton of good stuff for Ethereum specifically, and this is just another one of those. So I just think this is just worth highlighting because it's really great. Obviously, I'm biased here because I'm an ODAO member and I have RPL tokens, but come on, guys, like, Rocket Pool's awesome. Like, and I don't think there's much arguments against Rocket Pool being awesome there. I know there's been a bit of drama recently, actually, around a certain individual. I'm not going to name his name, but if you know who I'm talking about, you know who I'm talking about, making noise about the ODAO on Twitter. Look, the ODAO is a point of contention for the Rocket Pool community. There's no hiding that fact for a number of different reasons. Obviously, the biggest reason is the compensation amount that the ODAO members are making. At current prices of RPL, this can be anywhere from $400,000 to $500,000 a year. But when you look at it in a dollar terms, right? I think that's the incorrect way to look at it, because as far as I know, and Rocket Pool people can correct me if I'm wrong, the inflation that went to ODAO members has remained the same since it was incepted, and when it was incepted, RPL was around $1 to $2, which means that at most you were making, I think, a few $1,000s if you joined the ODAO really early on a month, and I don't even think it was that much, right? Because it was based on RPL tokens, not based on dollar values. Now, obviously, the RPL token has done extremely well, which means that now the ODAO members are making a lot of money, right, from this, and there are proposals being put forward to lower the inflation inflationary rewards that go to the ODAO, of which, I mean, obviously I can't really give a totally unbiased opinion here because I'm part of the ODAO, but I'm happy that those discussions are happening. That's what an organic community should be doing. I know there's drama involved in this sorts of stuff all the time. I mean, there always is, especially when it comes to money, but I'm happy those discussions are happening. Now, the last thing I want to say on that, since I'm talking about it, I mean, I actually debated whether I should talk about it on the refill today, but I am, so let me continue here. Well, let me finish up here. When I look at the money that the ODAO members are making, and again, I am biased here because I'm an ODAO member. But when I look at the money that they are making, I kind of look at it in the terms of how big the protocol is. So right now, the Rocket Pool fully diluted valuation is 1.1 billion or 1 billion or something like that, right? So let's just say it's 1 billion for argument's sake. Now, we add up the amount of rewards that all the ODAO members are making. Let's say it's $10 million. I don't know if it's less or more than that, but give or take a couple $1 million on either side. Let's just say 10 million for argument's sake. That is 1% going of I guess like the market cap of Rocket Pool going to the ODAO members who are responsible for a large a number of things. I know that the things that they do may seem trivial to people because it's just software that runs on the computer and it's automated, and the voting is kind of like a manual process, but it's a very easy process to do. And the tree gen, while there are people that are pretty slow on the tree gen, I mean, I came third, right? I'm very proud of my third place, but you only need a 50% quorum there. That gets done, right? That gets done in a relatively timely manner. But when you look at it like from that point of view, and where the ODAO is as a temporary vehicle as well, because eventually we want to phase out the ODAO in favor of obviously making Rocket Pool completely decentralized. I think that when looking at it in percentage terms instead of absolute dollar values, it makes sense. Now, that's not to say that you shouldn't, that the Rocket Pool community shouldn't work to reduce the rewards if they feel that it is too high, and if they feel that it is not actually the best use of the protocol's RPL, because it comes out of the inflationary rewards that go to the protocol, right? 15% of the 5% yearly inflation goes to the ODAO members. So it's totally fine for the community to do that, but I think it should be done from a base of not maybe just doing it for the sake of it, but also understanding that the ODAO members have an important role in the Rocket Pool ecosystem. That it is, hopefully, I mean, we all hope it is a temporary role. I mean, it is a temporary role, but we all hope it's not going to last like 5 years, right? We hope that it is, it can definitely be phased out over time to further strengthen the Rocket Pool protocol here. But yeah, I mean, that's why when I look at the people kind of bringing up the dollar value, I'm like, yeah, okay, but you have to look at the fact that RPL went up over time. You have to look at the fact that what the ODAO members actually do. You have to look at the fact that as more ODAO members are added, it actually dilutes the rest of the ODAO members, so it's more spread out, which is actually, I think, a better way of diluting the existing members than reducing the rewards. But you can do both, I guess. But and they're probably both going to happen anyway. But yeah, taking that all into account, I think that you can have a much healthier discussion starting from that base. At least that's my opinion there. But anyway, went off on the tangent there. I'm going to leave that one at that. Just really cool to see Coinbase Ventures getting more involved with Rocket Pool here. All right, so a tweet from Jesse Powell about the regulatory stuff that's been happening over the last, I guess, few weeks and few months now. So for those of you who don't know, Jesse is the co-founder and CEO of Kraken. So he said here, I have a theory. Regulators let the bad guys get big and blow up because it serves their agenda. Step 1, destroy capital resources in the crypto ecosystem. Step 2, burn people, deter adoption. Step 3, give air cover to good actors. The bad guys are actually on side, good guys are the enemies. And then he continues by saying, if the bad guys can run long enough without blowing up, they might just kill the good guys for you. Bad guys operate with huge competitive advantages. They suck up users' revenue and venture capital that would otherwise have gone to good guys. Bad guys can always be jailed later. Now, I don't think this just applies to the CeFi space. I definitely think this applies to the on-chain kind of ecosystem as well, maybe even more so here. But I broadly agree with Jesse here in that I've said it before about the regulatory stuff. A lot of things blew up, right? And a lot of these things that blew up were things that the regulators seem to either give a pass to, not look at, ignore, and then once they blow up, the regulators come along and be like, oh my god, all these users got hurt, now we have to go after these, this exchange and that service and blah, 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 and this and that. And they don't care if you're a good or bad guy, they're just going to go after you indiscriminately, and we've seen that play out, right? And I think the perfect example of this is what happened with FTX and the SEC. I mean, SBF may as well have been sleeping with Gary Gensler. That's how close they were, based on the evidence that I've seen. I mean, obviously, it hasn't been proven or anything like that. It's not been proven in a court of law, but there's a lot of evidence that shows this, and there's a lot of evidence that points to the fact that Gary Gensler was pretty close to giving the SBF and FTX a kind of safe harbor, which would have been obviously ridiculous. And now FTX is blown up. Gary Gensler and SEC has distanced themselves. They try to bury things under the rug. There was a whole positive spin campaign about SBF, and now it's kind of like out of the news cycle. The SEC, the other regulators are coming in hot, and they're like, let's just tear everything apart. We need to kind of go after these things because these things blow up. We're going to quote unquote protect investors, which is all bullshit, as we know. And they come at the legitimate players really hard, which is super frustrating, right? It's super frustrating for a number of different reasons. For obvious reason being that there's always all this uncertainty for teams. They got no idea what they're allowed and not allowed to do. They have to hire these lawyers, which cost an arm and a leg, and they're always handicapped by these things. They have to block users from the US, which is just crazy because for those of you in the US that see these lists of blocked areas whenever you go to a website, it's like the US, North Korea, Russia, Iran, right? So the US is kind of like part of the group of countries that have been sanctioned by the US. So, great company, guys, all because the US regulatory apparatus is so hostile towards crypto. Now, will this change anytime soon? We don't know. We have to keep fighting. We have to keep fighting until something gives. We have to keep making sure that we inform the politicians, we inform the policymakers as much as we can. And, there are some people that say, oh, well, okay, well, if in the US, the Republicans win the next election, everything will be okay. I don't think so, guys. Like, I don't think this is really a thing where it's the Democrats that are doing this and the Republicans won't. I don't think we should be relying on that at all. I think that this thing shouldn't be drawn in the sand over party lines. I do think, obviously, there are politicians on either side that are friendly to crypto, that are not friendly to crypto. It doesn't really matter. And honestly, on net, I don't know, out of all the politicians in the US, or all of Congress in the US, all of the Senate and all of that, I don't know which ones are pro-crypto and which aren't. I believe a lot of them don't even have a stance on crypto, so we can't really read into that. But it does seem that there are more pro-crypto Republicans than Democrats. But again, I don't have a good view here, and honestly, I don't think it matters. I really don't, because at the end of the day, I don't actually trust many politicians. They say a lot of things, and they go back on a lot of their promises, or most of their promises, if not some of them go back on all of their promises, right? So I don't think we should be relying on that. In saying that, we still have to play in their sandbox because they have the power. They give the regulatory bodies the power to do this, and the regulatory bodies, unfortunately, can even do their own things, and unless Congress stops them, they can just keep doing it. And we've seen that from the SEC. So taking all that into account, we need to keep fighting. Doesn't matter if you sit, what side of the political spectrum you sit on, support the politicians who are pro-crypto. Write to them if you're, write to representatives. Make sure that that they know that you care about these issues, that you want the US to be a crypto hub. Because really, guys, like I'm looking at the US right now, and I'm looking at how hostile they are to crypto, and I'm looking at the fact that they're pushing everyone away from the US, and I'm thinking, is the US going to miss this massive kind of economic event? Are they just going to neuter it and then force it overseas? And are other places in the world, like the Middle East, like Asia, like even Russia, right? Like Africa and India, are they going to take up the mantle? And is the US going to lose out? I actually think that's the way it's going right now. And in terms of places that are growing really fast and they're actually embracing crypto, Africa has actually surprised me. I've been digging deeper into Africa just generally lately. They're growing really fast. It seems they've kind of gotten past the extreme poverty that a lot of Africa suffered from, and they're kind of going into the developing. There are obviously parts of South Africa that can be considered a first world and have been developed, but there's a lot of Africa's a huge place, right? There's a lot of countries in Africa that are up and coming right now. And if they seize crypto, right, and they go through a similar growth period that China went through over the last 40 years of embracing capitalism, developing their nation, having all these young people ready to work, ready to build businesses, well, they're going to have a really good time. While the US is pushing this stuff out, Africa will be like, come here. And it's not just them, obviously. There's other places around the world as well. But I think that the US as a whole really needs to, and the politicians as a whole really need to take a step back here and actually think about what they're doing, because what they're doing right now is not great. Definitely not great for US-based crypto. But anyway, gonna leave that rant there. I just realized I'm coming up on time here, but I've got a bunch of other things to get through. Just an announcement from Coinbase that they're now supporting Arbitrum. So you can now send and receive ETH, DAI, and WBTC on Arbitrum directly from your Coinbase account. Now, this is huge, honestly. Like, I know Coinbase has already been supporting Optimism, but now they're supporting Arbitrum, so they're supporting two of the biggest layer 2s on Ethereum right now, and this is really going to be great for a lot of users. Not having to go to Ethereum layer 1 in order to bridge their assets to Arbitrum, being able to go straight from Coinbase to Arbitrum, and obviously Optimism and the Polygon POS chain they support as well is very cool here. So kudos to Coinbase for doing this. Love seeing them being progressive here with the layer 2s. A pretty big announcement out of zkSync. So they've renamed zkSync 2.0 to the zkSync era. So this is, they're claiming to be Ethereum's first zkEVM. I mean, this first zkEVM meme is hilarious. Everyone claims to be the first zkEVM. But anyway, they're as well as changing the name, they've opened mainnet to builders of their zkEVM and open sourcing the entire code base. So what this means is basically it's similar to how Arbitrum did their launch, where they basically opened it up to a developers for about a month before mainnet went live for users, so that devs could get all their projects live, test them out, make sure that it's all good for users, and then users could have something to play around with once it was live. So obviously, this makes a lot of sense, and I'm glad to see zkSync doing this. I'm looking forward to this going live on mainnet, zkSync era. There hasn't been a date given yet, but I'm really much looking forward to it because, as I said, guys, I feel like all the zkEVMs are going to be coming online around about the same time. Polygon has already committed to a date of March 27th for their mainnet. zkSync seems very, very close, in the next month or so. And then there is Scroll as well, which is currently in their alpha, but they shouldn't be too far behind in terms of launching their mainnet. So we're really going to see these things tested in the wild finally. It's not just going to be promises. No, it's not just going to be, oh yeah, we're first, we're the first zkEVM. It's going to be, okay, who has the apps, who has the users, who has the liquidity, whose mainnet actually is stable and reliable, whose is easier to use, whose is cheaper, right? That obviously plays into things as well. And that's all going to be live for us to see. What a glorious time to be an Ethereum user, where we have so many options of which of these kind of layer 2s to use, guys. I know pretty much all of them is still centralized. I get that. And obviously don't put more money on there than you're comfortable risking here, but at the end of the day, they are still a kind of like roll-ups, right? They're still zkEVMs. Yes, they're not in their final phase and won't be for quite a while, but they're getting there, right? And they've come a lot earlier than I think a lot of people thought, as I've mentioned plenty of times. So great to see this from zkSync. You can read the full thread and announcement blog post, which I'll link in the YouTube description below. All right, so this is a double up. This was just Arbitrum quote tweeting Coinbase about being supported. So speaking of Polygon zkEVM mainnet, so David Schwartz here, who's the co-founder of the Polygon Hermes team, has said that their definition of Polygon's definition of a zkEVM mainnet is that it's complete, proving all of the execution. It's permissionless, completely audited, and performant. Does it make sense? Don't trust self-claims, do your own research or ask for details. And then David shares some of those here. Now, this is what I was saying just before about how there's all these promises out there, there's all this marketing, there's all this kind of like memeing, but the real test is when it's on mainnet, and also defining what a zkEVM mainnet looks like. And I think this is a pretty good definition. It's complete. It's proving all the execution. I mean, that should be a given. It's permissionless. That obviously is something that we would love to see. I don't think it's necessarily critical, because you can still have a zkEVM and it be permissioned, and even if it's just for a short period of time, I think that would be okay, because right now technically zkSync is permissioned because it's just open to developers, so that's fine. But obviously we want them all to be permissionless. Completely audited, again, that needs to be a kind of critical thing. You shouldn't be going live without audits at all. And performance, obviously that is, I guess, I don't know if it's subjective, but it's obviously on a scale, right? Some will be more performant than others. The performance will change over time. Some zkEVMs will be cheaper than some others, and then those other ones will get flipped by other ones, and it'll be kind of like a race to the bottom on fees. So there is some nuance here, but generally I agree with this definition from David. But yeah, you can read the thread. I'll link it in the YouTube description below. Just a blog post here from Patrick McCrory titled, "Where is the one honest party for a rollup? Is it a sequencer, an executor? What problems arise?" So this is talking about the honest parties in rollups and kind of where they are and what and the details around it and how it's how it's considered safe and all that sort of stuff. So you can go check out this blog post. I'll link it in the YouTube description below. But I'm not going to try and TLDR it for you guys. I highly recommend giving it a read. Last couple of updates here. So Phi has raised a $2 million seed round led by Chapter 1, Delphi Digital, followed by Polygon and a bunch of amazing builders. Now, disclosure here, I invested in Phi a little while ago and as part of this round, of course, and I've highlighted them a bunch on the Refuel before as well. But the reason why I'm excited about Phi is because you guys know I prefer to invest in the infrastructure when it comes to NFT stuff rather than the NFTs themselves. And I looked at Phi and I was like, okay, they want to create what they're calling a Web3 social world. And I've talked about this before, about how in the Phi world, it basically takes your on-chain footprint and creates like 3D images of it, or I guess like items in the world, be it statues or buildings or whatever, and you can build your own little world there. Now, the reason why this spoke to me a lot is because I love the building simulation games. I've been playing them for a very long time. I sometimes get stuck on them to the point where I play hundreds and hundreds of hours of them without even realizing, and I've loved them for a very long time. I don't play them as much these days because I just don't have the time, but definitely I used to be very, very big into them. And my favorite one, it's kind of hard to pick a favorite here. I've tried a lot of them in the past here, but it's very hard to pick a favorite. I did really enjoy Oxygen Not Included, which is a bit different to your typical kind of isometric top-down one, but definitely very, very fun. I played that for quite a while and had a lot of fun with that, but there is so many of these. There's RimWorld, there's Dwarf Fortress, and each of them have their own kind of like quirks and their own skill levels and things like that. But I looked at Phi and I'm like, you know what? This is really cool. I think being able to take your on-chain footprint and be able to flex in a way in your own little world, be able to create your own little metaverse, I think is a really big deal. So I was happy to support Phi here, and I've been really impressed with the progress that they've been making and really excited about them. But anyway, enough gushing about them. You can go check out this. I'll link it in the YouTube description below. And finally here, okay, this is going to be a few minute discussion, so just to wrap this up. There has been a war happening. So the Blur NFT marketplace went live over the weekend, or at least kind of like I think they did another airdrop, and then they kind of started incentivizing trading with their token. I think they'd been live for a little while, but they put their token live, and it started this frenzy. And what they did was they, I think, put their fees to 0 on the Blur NFT marketplace. And they also don't enforce royalties on the marketplace or creator earnings. Now, because of this, OpenSea was forced to respond, and OpenSea made some big changes themselves. So they've dropped their fees to 0%, and they're saying for a limited time. We'll see how limited that time actually is. They've moved to optional creator earnings for all collections without on-chain enforcement. And marketplaces with the same policies will not be blocked by the operator filter. So the reason why they've done this is because they're feeling the pressure. This reminded me of what happened when SushiSwap launched and kind of like did the vampire attack on Uniswap, and then Uniswap counter launched a vampire attack on them with their own token, and Uniswap ended up winning in the end. But I don't think it's because of the token. I think Uniswap just ended up being a much better product, obviously, and SushiSwap struggled from trying to be I guess like a DAO too early on, like a true DAO too early on. But this isn't about them. This is about the NFT ecosystem. Now, I think fees are a race to the bottom, generally. I really do, especially for the app layer. For blockchains, it's different, and that's a whole different discussion, so I'm not going to get into that. But for the app layer, there's not... I think apps think that they have a moat that they really don't, especially when it comes to things that aren't enforced on chain. Because at the end of the day, your NFT exists on chain. You can go trade that on whatever marketplace you want to trade it on. You're not forced to trade it on OpenSea, right? And you're not forced to buy NFTs on OpenSea. You're not forced to, as I said, sell them on OpenSea, trade them on OpenSea, whatever. You can go use whichever marketplace you want. And Blur, what they did was they dropped their fees. They did their token to incentivize people to trade on there. They made something of a pro interface, so they were able to suck up a lot of liquidity really quickly. And I don't trade NFTs that often, pretty much rarely. But I use Blur, and I'm like, okay, yeah, this is a pro interface, and it feels just so much better than OpenSea. There was no lag. Everything was at a glance for me to look at. Yes, it took a bit of getting used to because there's a lot of information there, but I really, really enjoyed it. Now, if you're like me and you like those kind of interfaces, you're not going back to OpenSea, right? OpenSea is considered the, I guess, normie marketplace. And that's not to say OpenSea is a bad thing, but if you're a regular NFT trader, you're not going to want to use OpenSea anymore. You're going to go and use Blur. If you're a pro trader, if you're someone that's doing a lot of, day-to-day trading of NFTs and speculating on them, you're probably going to go use Blur now, especially because the fees are lower, right? Especially because the fees are lower, not only for the platform fees, but also for the royalties and creator earnings. Now, of course, the creator earnings and royalties is a whole different discussion that I don't really have any opinions on. As I said, I'm not really too in tune with the NFT ecosystem, but if anything that's not enforced on chain was only enforced at the kind of like app level or at the marketplace level, is very easy to get around, and it's very temporary. It's not something that's sustainable. So if you do want to inbuilt royalties into things, you can enforce them on chain, but even that is workaroundable. You can just wrap the asset and get around that sorts of stuff as well, unless you do it on transfer, but then you punish the users who want to transfer to other wallets and transfer things for free. It's a mess, right? But there are some ways to do it that I'm not going to discuss now. I've seen discussions around. Don't know if it's foolproof or not, but yeah, there are options here. But yeah, that was the whole drama, the TLDR of the drama over the last few days around that. But yeah, I think on that note, that's going to be it for today's longer episode. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.